global recession fears, stronger dollar, higher interest rates, and spike in bond yields are building pressure over the crypto markets. Since crypto markets move in tandem with global equity markets, the ongoing volatility in the US markets have cast a shadow on cryptocurrencies as well. All the three major indexes in the US markets like Dow Jones, Nasdaq Composite, and the S&P 500 have shed in the range of 19% to 30% so far this year. Therefore, the promise of more rate hikes proclaimed by the US Fed till 2023 is likely to keep crypto markets volatile too. According to CoinMarketCap.com, the global market capitalization of crypto assets has tumbled over 57% to $935 billion so far this year. Popular crypto asset Bitcoin, for instance, has tanked nearly 60% so far in 2022. Other assets like Ethereum, BNB, Solana, Dogecoin, and Polkadot have declined in the range of 46% to 81% during the same period. Analysts believe that the reduced risk appetite among investors compelled them to shift to less riskier assets like bonds. Going forward, they expect the volatility in crypto markets to continue in the near term.
Market will continue to be weak as long as Fed continues to raise rates and investors do not anticipate an end to the interest rates. One might argue that now that we have hit a 2-year low, the market should start finding a support. But when you have these cascades of selling, like we have seen since the Fed, really the support doesn't matter, and you can just slice through it. And it'll be interesting to see where the market sort of bottoms in the times to come. Specific to crypto, I think crypto markets also continue to sort of be sideways. Bitcoin has been primarily operating between 18,000 to 21,000 range. What I've been most excited about in the crypto space now is Ethereum. Since the last couple of weeks, we have been seeing a successful running blockchain on it after the Ethereum merge. And I think from an economics point of view, the net issuance of Ethereum has gone down from about 3.5% to less than 0.5%, which I believe is great in the long term. Now, this basically means that along with Bitcoin, Ethereum is one of the most deflationary assets, not just in crypto today, in fact, but across investment options available globally, given the high rates.
On the other hand, Devanshu Datta, independent market expert, says that the lack of any fundamental benchmark makes crypto assets a riskier bet to hold for the long-term horizon.
And if you're talking about how much the downside for Bitcoin could be, it could be anything. It could be 70%, 80%, 90%, 99%. All of that is possible. You don't have a fundamental benchmark of any kind. No? It's a question of do people see this as a possible long-term asset, or are they just going to get rid of it?
Meanwhile, technical charts suggest a death cross pattern for Bitcoin, which signals a bearish market ahead.
After hitting a historic peak of $68,990 in November last year, the first digital currency Bitcoin plunged under 2014 lows of $29,900 in this May 2022. At present, the currency has lost 70% of its value and trade with extreme bearishness. Besides having double top formation on the weekly chart, BTC, the trading symbol of Bitcoin, has formed a death cross, a short-term bearish signal where 20 weekly moving average has breached 200 weekly moving average on downside. Technically, death cross formation points at an elevated bearish trap with currency expecting more sell-off. From now on, if BTC violates the recent pullback level of $17,630, then it might fall to $15,000 in near future. To negate this death cross, Bitcoin needs to absorb selling prevailing in the range of 25,000 to 30,000, which was the double top breakdown range.
As regards today, investors will closely track the Reserve Bank of India's interest rate stance post the 3-day Monetary Policy Committee meeting. According to experts, the central bank is likely to raise interest rates up to 50 basis points. FII flows, rupee movement, and crude oil prices will also be on investors' radar.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.